Ladies and gentlemen, welcome back to another Mario Nawfal X Spaces. Hello and good day to you. You are here early, having followed the reminder link, joining us right away, and we appreciate that. Or maybe listening to the recording, which is also very cool. We appreciate you listening. Either way, here's what's going on. We just got started. You probably already know that. You've probably done some spaces. We've got guests coming up to join us on the panel. We've got, according to the title up top, market analysis, all-time highs this month, question mark, which is a good question. Things have been on the rise the last week at least for sure. And we're going to talk about that with all of our guests today. So it's Shark Tank Day. Shark Tank, which means we've got actually a couple different people that are going to be joining us a little bit later in the spaces to talk about some of their projects in kind of a quick show fashion. And I can't wait to get to that. So you guys might be familiar with the style or the theme, but I'm excited to be here for this one. So my guests that are joining me are familiar faces, and what you can do is if you're down there trying to be a guest, you can raise your hand using the request button, bottom left corner. Get your hand in the air, we'll approve you. If we can't get there, the next best thing for you to do is comment. In the bottom right down there is the most active comment section on X Spaces. That's where you should be leaving your concerns, comments, questions, mark your photo, whatever you want to do. Just be active in the comments. We appreciate that. You can share the space using the share button, put it on your timeline, send a DM, let people know what's going on. You can use the emoji button. Let us know what you think. Hearts, thumbs, faces. That's all very helpful. We can see what you think. It gives us a chance to kind of gauge what's going on. So, like I said, thanks for being here, you guys. We've got guests like Dan and Hydrate, and I see familiar faces. Irina's in the audience today. And my co-host is going to be here from Bubble Maps. Bubble Maps is sending Nick to the party. You guys know Nicholas from previous shows. I can't wait to get him up here in the co-host spot. We're going to meet him, and we're going to get rolling. I see Addie's here. Hell yeah. Familiar guests and stuff. Ben the dog is down in there. They're going to be coming up as part of our Shark Tank a little bit later. And we've got another guest from I believe it's going to be Kima Network that's going to be here later, you guys. So tune in for that. Nick, is that you over there?
Hello, my friend. Yes, this is me. I'm actually happy to be with you today, as always. Starting to be a very nice energy. Nice.
Appreciate it, man. We got to kick it off right. It's a big news day, as it always is. We've got some topics lined up, and what we're going to do, if you guys have been to shows like this before, is we're going to rip off with some news right out of the gate, and we've got guests lined up from around the industry to kind of give us their opinion on some of the hot topics. And then a little bit later, we'll do a reset to the room, make sure everybody's having a good time. And then when we get into the Shark Tank stuff, Nick and I are going to dive in with a couple of these projects, diving into the Shark Tank, as it were, right?
Oh, yes, man. I'm actually super excited because this is a very special episode today. We have two projects joining us for a Shark Tank kind of show. They will have 1 minute to pitch, and then we'll grill them with 15 minutes of question each. So first it's going to be Kima, and it's actually quite funny because Tomer is a very good friend of mine, and today I will be the one asking questions. So be prepared for this, my friend. And for the audience, Kima Network is a decentralized protocol that allows safe cross-chain transactions without using smart contracts. So I'm genuinely curious to hear how they do this. And then we're gonna have Ben the Dog, who's a Solana project inspired by the viral mobile game Talking Ben. Have you heard of Talking Ben before, Paul? The game on mobile?
Nope. This one was new for me to look at it before we got in here, and I'm excited to hear from them on this one as well. I think what's funny is when I think about the Shark Tank, I almost would want to know less. As they come and pitch to me, because it's the idea of a blind pitch is what it's supposed to be like. I turn around in the chair and I've got my arms all crossed. I look totally like unapproachable. I'm like, all right, go ahead. Like the less I know, the better. So I'm super excited to get it from that perspective. I've got enough to know who we're up against. I looked at their X account. You guys know I can't resist pulling up the actual X account and then checking out the website. But other than that, I haven't gone any further. I haven't played the game or anything like that. So I'm excited. Now, I have some slated news. I see guests have finally filled in. I see Irina is here. I appreciate that. Hydrate made it up. Addie made it up. Dan, you guys are stellar guests. I'm excited to tear into this. We had a little conversation before, and we've got at least 3 or 4 news topics. I think we can riff on these pretty quick, depending on how long we go down the rabbit hole on these. So remember, if we can raise our hands, we'll go in the order that we see hands up, and I'll start it off because Nick and I kind of already talked about this. The big news for the two of us right out of the gate was today the White House reversed their position on the veto that they promised they they were going to use if the bill came to them. I think it was SB 121, but I might be getting the number wrong on that, so don't quote me. I'm just the X Spaces guy. But the White House came out and reversed their position on this, and this is huge news because not a week ago or two, this was terrible because they sent out this message saying, don't bother passing this bill. It won't matter because if it gets to us, we're going to crush it. So the reversal today, I have opinions on it, but I don't want to hear mine. I want to hear from everybody else. And Nick, you could go if you want, and then Dan threw his hand up.
Yeah, absolutely. Just let me give you some context because this is kind of a complex topic for non-US citizens, which is my case. So I want to give a general overview for our listeners. So FIT 21 is a crypto bill that aimed to provide, how to say this, clear rules for regulating crypto in the US. And especially after what happened with FTX, it was a big trauma for everybody there. And President Biden actually considered vetoing this bill because it could weaken the SEC ability to protect investors. So the administration believed the current SEC rules are important because it can prevent financial instability and protect consumers. So, of course, a lot of people in the crypto industry are happy that the White House is no longer vetoing this bill because it means the crypto space has more liberty to innovate and progress, I guess. Maybe at the expense of the consumer sometimes, but still innovation first. So, at the end of the day, it's just a matter of personal preference, but I would love to hear from the panel. Is this decision bullish for crypto industry, and how involved should the U.S. government be in regard to crypto industry? Dan, go ahead, man. I see you raising your hands.
Hey, yeah, thanks, guys. Good to be here. Yeah, again, it's like the worst line that any government official can say is, "I'm from the government and I'm here to help." Right? I did a tweet earlier, or an X post, whatever you call it now. This is crypto crossing the Rubicon. This is crypto's Rubicon moment. This has now become a bipartisan issue where both parties are now in favor of crypto and Bitcoin. And I think I'm speculating a little bit, but I think what it was is the fact that Trump came out very much in favor of crypto and Bitcoin, and I think that put the spooks up the Democrats. They were very anti-crypto; they were kind of against it. And as you said, Biden was planning to veto this particular bill. I think they saw the internal polling and saw what a large block the crypto voting block now is, and just did a complete volte-face about everything, and then came out and for it. In my opinion, as I said, this is crypto crossing the Rubicon. It's now become too big of an issue for either side to stand against. It's now become a bipartisan issue. So it's the classic, I think it was Gandhi that said, first they ignore you, then they laugh at you, then they fight you, then you win. We're now in the final stages of this, this plays out.
I had to look up Rubicon moment, and I'm so glad you said that twice. I feel so much better. That's my daily dose of Rome for the day. That's such a great reference. If anybody hadn't got that, I suggest you look it up. Addie went hand up, and then David went next. Addie, you go first.
Hello? Can you guys hear me?
Yeah, loud and clear, bro.
All right. I think that, this is obviously a good thing for crypto, but, as you guys know from previous conversations you guys have had with me, I'm with the belief that cryptocurrencies inherently is an unstoppable technology. So there is no choice but to adopt it. And frankly, to me, the bill is really not that interesting. It's not really that complete. It's really just the baby steps towards quote unquote regulating this industry. I think personally, the more interesting facet here of adoption that we're seeing is Trump coming out, accepting a variety of tokens for donations for his campaign, including meme tokens, by the way. And not only that, we got RFK coming out saying apes stronger together and embracing the whole retail industry, retail sector's kind of adoption curve, I guess you could say, in that sense. And I think those are much more impactful signs of adoption, that we have two presidential candidates pretty much fully embracing what retail activity is in the markets right now, which is heavily crypto and meme stocks. And this is really interesting to me because I think what you're going to see happen as soon as these donations go live, people are going to get the addresses of these campaigns that you could contribute to, and they're just going to start sending all sorts of shit coins there. And this brings like a really interesting phenomenon to the whole political race, because now anybody can just send capital to any campaign without any KYC, permissionlessly, and there's nothing you can do about it. Like, well, what can you do about it? There's nothing. As soon as those campaign starts accepting donations, their addresses are going to be public. Everyone's going to know them, and they're going to get bombarded with 100,000 different meme coins. And anything that has value, I don't see how the campaigns are going to just turn it down. And what are they going to do? Send it back or burn it? They're probably just going to liquidate it into USDC and cash it out. So effectively what we're seeing is the first presidential election where shit coins are going to be a part of it. So I think that's much more interesting than this bill that's happening right now.
It's definitely, we had that on the news list to get to, so I don't mind jumping ahead. But the funny thing is, before I give the microphone to David, is you think sending meme coins is going to be problematic or interesting. Wait till somebody starts sending Tornado Cash to ETH, and then they can't use those addresses anymore. It gets so much worse when you go down the iceberg. David, you're up.
Yeah, exactly how we got to where we are right now in terms of U.S. politics and what motivations were, behind where we are today, I think is less relevant, although it's interesting drama. I think it's less relevant versus the conclusion, which is clearly it's now a bipartisan issue to go ahead and figure out the U.S. regulatory approach to crypto. It's not going to be an approach that is very restrictive, it seems. In terms of today's bill, I think it's significant only because it goes ahead and begins to clearly put various cryptocurrencies in buckets, whether they're going to be commodities regulated by the CFTC, clearly going to be securities regulated by the Securities and Exchange Commission, and also gives a framework as to what kind of disclosure is going to be going to be necessary. And so, it's really important that we will now have direction. It's unlikely that the heads of the commissions that are going to decide this are the current heads of the commissions in terms of what the details are, which is a good thing, right? We need to kind of clean the slate in order to go ahead and move forward. And the other thing that's really important for the crypto sector, and I know it's not the most exciting part of the crypto sector, but the fact that stable coins are now going to be sanctioned explicitly by Congress and by regulators will allow those stable coins to now become an active piece of commerce in this country, which I think is great. I think, digital dollars in the form of stable coins, really important. It could lead to an explosion of adoption of cryptocurrency more broadly, and it will go ahead and put cryptocurrency squarely within the parlance of every major corporation in this country, certainly those that face consumers.
Those are all great points, and I saw Dan threw a hand up right near the end of that. Spark something for you, Dan?
Yeah, so I mean, look, most empires last maybe 200, 250 years or so. I think the US is running up towards the end of its time as being the global hegemon. Look, if you want the US dollar to continue to be the hegemon of commerce, whatever, then this is a good way to embrace that. If you embrace stablecoins and if you allow that to happen, then it's going to maintain the US dollar's position as the global hegemon of commerce, right? You can tilt against windmills as much as you like, but you can't deny the progress of technology and society. So I think I'm not a big conspiracy theorist or anything like that, but I think the US's time as the superpower in the world is waning, and I say that as a Brit, and we're used to our time as the hegemon in the global superpower having come to an end. Look, lean into this or be left behind, and so I think that's my view on stablecoins. I think they're going to embrace stablecoins first, and that will be the wedge issue that gets cryptocurrency inside of the the whole apparatus of everything.
I can appreciate a post-empirical take. That's neat. Addy, let's do Addy, and then I want to go back to Nick for a new question.
Yeah, I just want to touch on the stablecoin topic a little bit. I agree with Dan. The demand for the USD stablecoin across the world has most likely, if we were to able to look at the data somehow, it most likely helped towards the US dollar hegemony remaining intact, as well as it continuing to keep its reserve status, if anything, because it makes the dollar so accessible to everybody, right? Which is something of a kind of interesting situation in my eyes, because I feel like, the access to the dollar across the globe has been heavily controlled by central banking systems that don't necessarily want everyone to have very easy access to the dollar, right? And again, that's changing because of crypto, because again, why? Crypto is an unstoppable technology. It is permissionless. So you simply cannot stop people accessing the dollar and fulfilling that demand now, right? So I think the United States government embracing stablecoins as opposed to CBDCs is a huge step towards America and the United States dollar staying as the de facto reserve currency, and the dollar hegemony continues, basically.
Those are good points. I appreciate your point on that. And another thing that Nick and I wanted to talk about, as I'm trying to keep an eye on the clock, I don't want to cut that conversation off because I could do a lot more on the politics, right? But Nick has his eye on now the news about the ETH ETF, because all this different news about political pressure. There was also some news about the ETF moving, right, Nick?
Absolutely, my friend. And, I love hearing discussions about crypto politics in the US from a distance, because as a French, it's super interesting to see the US at the forefront of crypto. I don't know how we got there, but this is how it is. So big power, big responsibility. But yes, as you said, ETH spot ETF. Not sure if you've seen, but 2 days ago, a Bloomberg ETF analyst called Eric Balkunas, he said that the chance of a spot Ethereum ETF getting approved is not 25, but it's actually 75%. And he shared this on social media, on Twitter especially. And his post blew up. 1 million views in an hour. Crypto can get pretty intense. And this caused Ethereum price to jump by 20% in a day. Hold on. By 20% in a day, which was insane. He mentioned hearing rumors that the SEC might change its stance on Ethereum ETFs, especially with their decision deadlines on May 23rd and 24th. So this means he's got some strong new insight, I guess. And if the ETF gets approved, obviously it could attract many new investors, push Ethereum prices even higher. We know how it is. So I want to hear it from Dave, who's raising his hands. Do you think the approval of a spot Ethereum ETF will lead to more growth, or is it a short-term bubble that will burst?
Well, actually, neither. How about that? So first, I mean,
Okay.
Eric and James have been great on this topic, very fact-based, very dispassionate. And what they were reacting to was a very surprising flurry of notices given from the SEC to ETF issuers to sharpen their pencils. You might remember in early January when it was getting ready for the Bitcoin ETF and they were coming close to the decision time, that people knew the Bitcoin ETF was going to get approved because the SEC went to the issuers and said, okay, you need to make this change, I need this, you need this, you need this, on a very short timetable, get this to me quickly so they can get all their ducks in a row. The expectation that they had that it wouldn't be approved was because they hadn't done that and there was no action. And when generally there's no action up until the date, that means they're not going to approve it. But in this particular case, all of a sudden out of the blue, the SEC did exactly that. And they went to all the issuers, and you've probably seen a flurry of, Fidelity and others who have amended their filings. And so that's why. It's relatively obvious what happened. Obviously, I'm not sitting in the White House, so I can't tell you for sure, but I've heard multiple people who are well connected effectively say the same thing, which is that the only argument that they possibly could have had to say no to this is that Ethereum is a security, and the custody that is proposed in the ETF filings aren't compliant under securities laws. Now, if they are not willing to say Ethereum is a security, then the basis for their denial is likely to be considered by the courts arbitrary and capricious, and they probably don't want to go down that road. And in all likelihood, a little birdie said, you can't say that, because if you do, it will be bad for us politically. Don't. And so that's likely what happened. Now, is that certain? Of course not. I'm speculating, but I think it's a pretty good speculation. Now, that said, in terms of the 20%, I think it's really important to understand what I'm about to say. Over the last 6 months, there's been a trading range between Bitcoin and Ethereum, the Bitcoin-Ether ratio, between 0.06 something and 0.046. Before this announcement yesterday, it was trading at just below 0.046. The rally took it to 0.054, more or less right back to the middle of the range. Now, is that irrational euphoria? No, it's right back to the middle of the range, because now they're going to be pari passu with each other. Is that indicative of continued growth? Not necessarily. Doesn't mean it won't, doesn't mean it will. We could talk about that. And I have opinions, but effectively, what we saw was a snap reversion to the middle of the range, which of course triggered massive trading opportunities for professionals in the market, because the Bitcoin Ether ratio is something that's very heavily traded. My own company, CoinRoutes, we saw enormous flows from our clients on this ratio, trading both sides of it. So it's not about euphoria. It's about now the belief in the market is Bitcoin and Ether, at least from an ETF point of view, are on the same footing.
I'm so glad Dave is in the spaces to go on to that, because that was the perfect person for you to go to, Nick. Dave, I appreciate your input on that. Can I ask you a follow-up question? Because I think what a lot of us from different perspectives, I'm going to take the DGen perspective because that's where I live. The green candle surprised a lot of people, and you're saying that the initial shock in the purchase drove more retail discovery. Like, if people that were late saw this thing and they went, oh shit, I got to go buy some Ethereum too. My question, I guess, it becomes, and I know you won't know the full answer to this, but is there more room for discovery on Ethereum? Because I think less people know about Ethereum than Bitcoin just by. So is the approval for Ethereum bigger than the approval was for Bitcoin in that sense?
No, but it's different, right? So the approval for Bitcoin mattered because there is an enormous number of registered investment advisors, financial advisors, investment management companies, and what have you, that had no ability whatsoever to invest in Bitcoin, and they've been all hearing that this is something they should consider in their portfolio allocations. And so it's much more of a professional market, and the ETF has dramatically outperformed everybody's expectation because of the impact of people diversifying their portfolio. Ethereum is a different matter. I'm not saying it's a bad story. I'm not saying that at all. I am not a Bitcoin maxi. But Ethereum is a technology. It's more like if you said to the world, okay, you can't invest in this Facebook IPO or this Netscape IPO. More Netscape's probably a better example because it was really early, and you might want to, and then all of a sudden, when it was still trading around or still trading in some sort of price range, you said, okay, now you can. Now, does that mean everyone's going to run into it? Well, it depends. Is the story right, et cetera? It's going to be harder to explain the story, but I think there's, at a retail level, there are a lot more people who might be hearing about the story. So it could go either way. My personal belief is Ethereum has more competition versus other layer ones, and that it has its own network effect, which means it's not going anywhere. And so I kind of come out in the middle. I think that kind of this muted middle of the range, follow the rest of the market is more likely, but that's an opinion that is not a strong opinion. And dear God, don't take any of that as investment advice.
No, I won't. And thank you for letting me do the follow up because you actually did surprise me with your answer. And I think Dan's got an opinion on it, but Addy got his hand up first. And here's what I'll say is we're about 5 minutes away or less from jumping into the Shark Tank, you guys. So I want to give you both about 2 minutes on this, and then we'll do the reset with Nick, and we're going to get ready to get the wetsuits on and see what the sharks are biting. Okay, so Addy first, and then Dan.
All right. Keep it short. I just wanted to say that, in my opinion, I don't think there will be an Ethereum approval tomorrow. Just looking at the data of things, like I just feel like the sentiment overall is just way too overly positive. If you look at the prediction markets for Ethereum ETF approval this month, it was at 10% chance before all this kind of ruckus happened in the media with, the crypto bill, this and that. And, personally, I think if we compare it to the BTC approval back in January, where we had a fake approval and all these shenanigans happening, I just kind of look at that and I look at the data, the inflow into exchanges right now. I feel like this is going to turn out to be a sell the news event and we're not going to see an approval.
Fair take. Dan, what do you think?
I think this is a much bigger issue than the Bitcoin ETF approval because Bitcoin has. So I am somewhat of a Bitcoin maxi. I'm entirely Bitcoin, but I think this is a bigger issue for the reasons of this is a paradigm shift. This is as I said, crossing the Rubicon moment because this signifies that the regulators in the US are changing their opinion on the entire space, not just on Bitcoin. Bitcoin, they were forced, kicking and screaming, dragged by their heels, kicking and screaming to approve the ETF. This is a crossing Rubicon movement where they are approving Ethereum, a complete volte-face about this. I think this is a change in the opinion and the thinking of the entire regulatory structure of the US. So I think this is much more of a watershed moment than being dragged kicking and screaming to approve the Bitcoin ETF. So I think the entire space has a lot more, blue skies above it than we had before.
I appreciate both of you guys giving me those answers and doing it in such a concise and time-conscious manner. Very cool because you gave me time to do the room reset because Nick and I are about to get down with the Shark Tank. It's time for Mario Nawfal Shark Tank. You guys ready? Can I get some emojis down there? This would be really cool. So what I could also use is some of you people may not have been here the whole time and you have no idea what I'm talking about because you just got here for the news. So I'm going to do the room reset. Hi, everybody. It's Pulse Digital and Bubble Maps. It's Nick from Bubble Maps, and we're hosting with Mario today. And you're about to dive into the Shark Tank. So it's time to get wet. What we're going to do is we're going to interview two projects. We're going to talk about what they're doing. They are our guests today. We're going to hear from Ben the dog, and then we're also going to hear from where's Kima is here. If I'm looking, scrolling, I can't see him because my screen might be messed up. But Kima is also here, and we're going to hear from both of them. And what we're going to do is Nick's going to get down and dirty and talk to these people about their projects. We're all going to ask questions and follow-ups and learn about this together. But we're ready for the Shark Tank. So what can you do for me in the meantime? Comments in the bottom right. If you can't get a speaker spot to ask your question, tag the project in the comments in the bottom right because I guarantee you they're scouring these comments. And even after the spaces, they can still come back and answer your questions. So tag Ben, tag Kima if you've got questions down there. I'm sure they'll get back to them later. They'll appreciate the interactions because those are valuable on X. You can also share the spaces. If you're still in the bin groups and you haven't shared this on your timeline, share it. If you're with Kima, share it. Let people know that you're about to rip into this stuff on the Mario show. Big deal, big audience, right? And last is emojis. If you hear things you like, react. We like the reacts too. So without further ado, I'm going to hand it over to Nick, and Nick's going to get right into the Shark Tank, man. I'm ready to get wet. Let's go.
Oh, let's go, man. Now, what everybody has been waiting. It is the time for the 1 minute elevator pitch Shark Tank style. So very exciting. We're going to hear from two projects. The first one is going to be Kima Network, and Tomer Nuni is here with us today to pitch, and then we'll deep dive into Ben the dog. So let's start right now. I'm very curious to hear the first pitch. Tomer Nuni, the floor is yours. 1 minute, my friend. Let's go.
Thank you, guys. Tomer, CMO of Kima Network. Kima is an interoperability protocol that allows, in a completely decentralized manner, communication between any financial ecosystem, decentralized and centralized, with no smart contracts. basically in the most secure way known to man today. When I say cross ecosystem, it means that we are able to connect any blockchain to any blockchain on Earth in a completely agnostic way to technology and to asset class, and any centralized entity to any blockchain in a completely decentralized manner with no intermediaries. We're basically going to revolutionize the Web3 space by allowing mass adaptation of crypto in Web3 without needing any Web2 person to go anywhere. That's it in a minute.
1 minute sharp. 1 minute sharp. Your pitch was so hot that I hear the police ringing behind you, my friend. But no, I wanted to look. Let me share a personal experience. Cross chain, bridging funds between chain is the most painful thing I've ever had to do. Right? It is so obscure. It is so centralized. You send your funds to you, so you don't know who, and then you receive your funds from someone else. It is a very messed up experience, and it is far away from the ethos, from the vision of DeFi. So I want to ask you a very simple question. Do you think we're anywhere close to actual seamless interoperability between chains?
Yes, of course, 100%. We're already there. Actually, on testnet, it already is working. You can try it on our testnet. It's working 100%. We're moving assets without moving assets, like magic. It's like bridging. We're doing this magic with an algorithm that we've developed also in-house in Kima, part of the network, called Lima, that basically manages the liquidity on each side and allows you basically using stable coins to turn any coin to any coin on the other end, and to any other digital asset. By the way, it doesn't need to be actually a coin. So it does exist. MasterCard already running our nodes on the testnet now. Not sure if you guys saw the news. It was a huge story at the beginning of this week on Cointelegraph and all over. Google us and you will find it. So it's actually working, and that interoperability is already here in the most secure, seamless, and clueless way. As you said, bridging is very hard. Any person can basically do it in a super simple manner. Yeah, check it out. We have even a demo that you can test, which is very, very simple. You can transfer from a credit card, of course, in a test environment, and from any chain to any chain using their testnets on our testnet. Then yeah, give it a
Okay,
try. It's already here.
you said from any chain to any chain. So for example, can I bridge funds from Ethereum to Bitcoin, or is it only between EVM chains? Can you a bit elaborate on this?
Yes, great question. So Bitcoin is, as you know, a different animal because Bitcoin has no, it's not a smart network. It's basically a dumb, you can say, network when you can only transfer Bitcoin on it. We're doing it with a special technology of locking on Bitcoin. Tech team can explain much more about the actual Bitcoin process. But basically, we're providing liquidity against the Bitcoin on any chain that you would like to transfer your funds to. And of course, on Bitcoin, only Bitcoin coin exists. But for example, with Kima, there's now a project that builds a solution to basically lock your Bitcoin on a Bitcoin network and to stake ETH on a Ethereum, for example, on a Eigenlayer. Then very, very unique. And yes, any token to any token, as long as, of course, we have our in and outs with stablecoins who live naturally on any chain in their natural, unwrapped, not synthetic way.
Well, that sounds very promising. You said two words that are super important here. The first one you said is clueless, meaning when I bridge between two chains, I don't want to know, I don't want to feel the pain of actually traditional bridging solutions. It's so long and so tedious. And the other word that you said is safety. Now you mentioned you don't have any smart contracts, which could be a red flag at first glance, because what do you mean you don't have smart contract? Are you a blockchain solution or what? So please explain to us how you actually did it, and what do you think removing smart contracts is actually a net benefit for cross-chain transactions?
Great question, Nick. Thank you for it. So I will try to explain. And by the way, you asked about EVMs, and we can definitely do any chain, of course. We're agnostic to technology now and in the future and to the asset class. Then it doesn't really matter. But Bitcoin, which was before, was a special breed of animal. So I had to explain specifically about Bitcoin. Now, going back to how we do it without smart contract, it's a great question. So unlike all other blockchains, Kima has no users, Kima has no smart contracts, and Kima has no liquidity. What Kima actually has is a validator nodes. These validator nodes are basically have one use: to transfer the assets you want on from the to the target chain. Excuse me, that you want to transfer to. So Kima is, due to the nature of Kima, having no smart contracts. We're the only blockchain on Earth that enables SDKs and API existence. That's how the centralized world is connecting to Kima to communicate with any decentralized protocol, any blockchain. Doing it without smart contract, because in Kima, we're transferring messages. Kima works in a very unique way. So if you're working with a bridge, basically we'll be sending 100 USDC to a smart contract. The smart contract, once confirming 100 USDC has arrived, will initiate another 100 USDC smart contract transaction on another chain. For example, Solana 100 USDC, and then initiating on Ethereum the sending of 100 USDC. That happens with smart contracts. Smart contracts or oracles are basically software. Any software written by man can be hacked by another man. Simple. There is no bridge that will not be hacked eventually. If someone thinks that bridges will not be hacked, it's just a matter of time. It's not if. They will all get hacked. We see it daily. We see it all the time. Now, Kima works in a way that we're transferring a message using the network. So indeed, on Solana, you will be sending 100 USDC on Solana. And once that USDC arrived to Solana smart contract, the smart contract initiates now a message. He sends a message to the Kima relay, to the Kima network. On the Kima network, the message arrives to the validators. It's a message. We're not sending any asset. And that message basically now needs to be validated by the validator themselves. So the validators are going to Solana address, to the MPC wallet address that received the 100 USDC, needs to check that the transaction indeed actually happened. And if the transaction indeed actually happened, then we need 2/3 of the validators to validate it. And after 2/3 of the validators are validating it, we initiate a release of a shard that is stored on the CPU core of each node, and then all of them are forming a transaction on the MPC wallet on the target chain, for example, in that example, Ethereum, and sending 100 USDC. Everything is being done through the relay. So theoretically, three unhackable levels happened here. First, we did not send any money. We sent a message. No money was lost on the other side of the bridge. We only sent a message. 1. 2, our validators had to physically confirm and see that indeed 100 USDC have arrived in the original destination, that they are indeed there, that they exist. Once they do so, each of them reveals the shard hosted on the CPU core, stored on the CPU core of the validator, and then forming an MPC, going to the MPC wallet on the target chain and initiating a transaction to send 100 USDC. These make it theoretically unhackable, all of these three stages.
Hold on, I have so many questions, man, to be honest, but I saw 4 hands raising as you were talking. I think this is a very interesting segment in the crypto industry, the one that suffered the biggest hacks, actually, so the most vulnerable segment in the whole crypto space. Dan, I saw you raising your hands first, so we'll go through Dan, then AD, and then if we have time, Rish and Hydrate.
Hey, yeah. So, I actually co-founded a company that did almost exactly the same thing about 4 years ago, doing permissionless cross-chain swaps. It was a company called Swingby. It was about 4 years ago. So I understand this space pretty well. Yeah, I think when you say like you're providing liquidity, that's the thing that kind of got my back up a little bit. You're putting some funds up. I think what you should probably, again, this is completely unsolicited advice, but maybe try and crowdsource that liquidity by offering a yield on the deposits to crowdsource that liquidity. But
We are.
yeah,
We actually
yeah.
are. That's a great. That's a great
So
input. That's actually how it works.
yeah. Yeah, sorry, I'm coming at this entirely cold. I don't know anything about what you're doing. I'm just coming at this entirely cold. Um, but yeah, and then I think it's an MPC stuff, right? So you have multiple nodes that have to acknowledge and see this kind of stuff, and then authorize a transaction between the nodes. I'm just saying, yeah, that's my background. Look, I co-founded a company about 4 years ago that did exactly the same thing. Yeah, I guess my main advice was trying to crowdfund that liquidity. Because when you said we're providing liquidity, that made it sound like it was a centralized thing that was providing that liquidity. As long as you make that
Oh, no,
very
no,
clear, that's
no.
a
Of course not.
crowdfund liquidity. Yeah,
Yeah,
yeah.
of course
Apologies,
not.
I'm just again coming at this very cold, just shooting from the hip. So that's all I have to
No,
say.
well,
Literally, thank you.
well, that's a great input actually, because that's exactly how we're operating. I'm also, I'm a yield hunter myself, and working with my stables cross chains, and basically, I think that I participated in every airdrop hunt that was here, and all of these lending platforms also. And we're going to do basically exactly the same. But imagine that your money doesn't move anywhere; it just stays in one location. No one actually lends it. There's no smart contract that manages it, but basically are generating yield. We now
Yep,
see
if I can just chip
something.
in real quick.
Please,
Apologies.
please.
Yeah, yeah. Very good. Again, as I said, this is a company that I co-founded about 4 years ago. Look, if you want to connect offline, that's great. Can give you some, advice on the trenches and that kind of stuff. But yeah, try and make sure that you've covered those bases. Apologies.
Thank you for sharing your perspective, Dan. This is actually quite interesting to have two builders in the same vertical in the space. That's super cool. AD, my friend, I saw you raising your hands as well. If you have any questions, go ahead.
Yeah, just one. A couple of the other things I was thinking about already got touched on. So when it comes to bridging, there's obviously a lot of bridges. We've had our issues. They're very expensive, to be fair. But in terms of atomic swaps, like there's a lot of atomic swaps already existing. There's a lot of atomic swaps coming out. Most of the ones that are existing, for example, like SideShift, is basically a centralized layer that's processing the transactions and the trades for you, right? So my question here is, what exactly is the benefit to decentralizing this layer? Because from my perspective, I think a centralized layer would actually be more efficient and the cost would be cheaper.
Well, allow me to understand right, I'm not sure how it will be cheaper because basically you're just sending a message on the Kima network. So in the Kima network, just when you're paying for, let's say, the stamp, which is basically a fraction of a cent to send that message. And on the other end, providing the liquidity, you're basically sent $100 and you receive technically $100. And there was like this tiny gas fee that you pay to get on the other side. It's much more efficient and much cheaper than any centralized solution. And at the end of the day, of course, it's completely decentralized. Then no one is actually managing your money. The money is yours. You won't be stuck with an exchange. They're telling you that, excuse me, you need to go over KYC again, KYB again, and all of this nightmare because you did something that they saw that might be malicious. There are many reasons why not to work with any centralized entity, if you ask me, but that's just me. And in a completely decentralized manner, you're basically eliminating 100% the intermediary. So imagine that at the moment in a bank, if you want to use your ETH to purchase, let's say, an Apple stock, then it means you will be needing someone to buy the risk from the bank, right? So you will pay a very high fee to liquidate, let's say, your even USDC on Ethereum to something like 980 dollars to purchase Apple stock. So you will lose about these $20 because you have an intermediary, which is a centralized entity that receives the transaction and then provides liquidity against it to the bank, and then you bought the stock. With Kima, basically, the bank can connect directly to Ethereum, once, of course, everything approved on your end, and can send a message to basically send the 1,000 USDC, for example, or to liquidate ETH worth 1,000 USDC, and send it to its own address, and then basically grant you $1,000 against it. Everything in a decentralized manner, and this is why basically it needs to be decentralized. If we're talking about communication across chains, I wouldn't want that any communication across chains is going to be centralized. We'll basically miss the whole thing about the beauty of digital asset ownership and decentralization, in my own personal opinion. But of course, it's debatable. If we want to do everything centralized, guys, then don't even trouble with DeFi. Just buy everything on a centralized exchange. Much easier. Keep your money there. They will
Sorry to
manage
step
it.
in. I think the word you're looking for is permissionless. It's permissionless. Is what you're looking for, right?
Mm-hmm.
Gentlemen, I'm sorry.
Permissionless.
I
Sorry,
actually
can't
have
be
to
repeated.
interrupt. We're reaching the 15 minutes, but it was super
Sorry.
interesting.
Try to be short.
No worries, but you two, you should definitely talk after this space, after this show, because I'm sure you have plenty of experiences to share between each other. And now we're gonna have our second pitch. Ben the dog, inspired by the viral mobile game Token Ben, which has captured the hearts of millions. So, Ben the dog, the floor is yours. Let's hear your 1 minute pitch.
Hello, everyone. You are listening to Ben. I am Ben the dog's assistant, another Ben. So you've got two Bens here. You can confirm you can all hear me?
Loud and clear, man. Go ahead.
Great. We are Ben the Dog, a gaming project powered by a Solana meme token, Ben Dog. Launched earlier this year, we're a project that is founded by an incredible team, really well positioned to push the token and the project forward, but also incubated by Gotbit, a Web3 hedge fund. We previously hit a $20 million market cap. We were number one trending on DEX Tools, number one trending on DEX Screener, MEXC listed amongst other exchanges, and also in an official partnership with HotDAO, the number one DApp on DApp Radar, to bring more than 40,000 users with the support of the Near co-founder. We have a community of 15K in X and 30K in Telegram. We have 2 games live right now. More games to follow as we build out the full casual gaming ecosystem. An amazing questing platform with a community airdrop launching very soon. And we're about to go full force with a rebrand, all in line with the renewed Ben version 2. A few weeks ago, we took some time out to gather ourselves, reset the roadmap, and now Ben is busy breathing life back into the chart. You can check that out right now. We want to enrich our community, invite new communities to be part of Ben's journey, which is very gaming, casual gaming centric. And we are building more partnerships, building those on top of the Solana Mobile partnership and the Near partnership. And we're launching our first one of those with an exciting partnership coming up with MemeFi. And that is my 1 minute pitch.
Thank you so much, Ben. Thank you for the pitch. As you were talking, I was checking 2 things. The first one is your charts, because usually when you have more of a meme project on Solana, the hype can die very quickly. So this is the first thing that we're going to address. And then I was also checking your bubble map, which is essentially the distribution of your token. And I've seen some pretty interesting stuff. We're going to get to this part later on. So my first question for you, man, is how do you make sure, and this question could be applied to any meme coins here, but how are you going to make sure that the hype is going to be sustainable, maintained on the long run? Eventually, your goal is going to be part of the culture. This is how a meme coin actually managed to stay alive. It's not staying a meme, but becoming culture.
Yeah.
So how are you going to achieve this?
It's a really, really good question. And actually, this is why we have tried really hard not just to go live with a meme token, but actually link it to a full gaming platform strategy. Our intention is to take our incredible character and obviously continue to build amazing memes around the character, but implement them through a full suite of casual games that appeal to different ages, different demographics, different people, both in Web3 and out of Web3. And that is really our intention, to create something that's more than a meme.
Understandable, and I wish you could get to that point. I also want to briefly touch upon something that was released by Binance a couple of days ago. They released a paper on high FDV, low flow tokens that are becoming a huge issue in the space. And surprisingly, in these reports, do you know, Ben, what was the biggest year-to-date performing assets in the space?
I don't. Tell me.
It is meme coins.
Of course.
Beating by far Deepen, AI, even Bitcoin, real world assets. Everything is beaten by meme coins, and Binance is saying it themselves. So, I have nothing against meme coins at all. I'm actually quite bullish on meme coins. So my second question for you is, can you please tell us a bit on which exchanges you're listing on, a bit on like those metrics that you want to share with us, the market cap, the volume? I see your volume is actually quite high right now.
Yeah.
So tell us a bit about it.
Our volume is over $8 million a day. Our market cap at the moment, I think we're floating around the $7-8 million market cap, but we've been up as high as 20 plus. And we have a really, really solid distribution of token amongst 7,500 holders. So we're really working on how we can continue to put the token in the hands of people who not just are interested in meme tokens, but actually are interested in participating with Ben the Dog. We held a great campaign with the Solana mobile team, and we were able to distribute $35,000 worth of tokens to over 3,000 people. And we are continuing to seek out other opportunities to bring full campaigns that onboard other communities into the ecosystem that we're building.
Hold on, you said you were in direct contact with the Solana mobile team?
Yes, absolutely.
Damn, that's pretty cool. It is the same as Bonk. Do you think your token is going to be accessible as an airdrop on their mobile phone?
Our intention is to do that, but also not just to give it as an airdrop, but also to reward people who use their Solana mobile to download the game and play the game to earn the token.
Got you, my friend. I also have a question about Godbit. You did mention you were incubated by Godbit, or you have a partnership with Godbit?
We are incubated by them. So they are in partnership with the founding team behind Ben the Dog.
Okay, good to know. I'd be curious to learn more on what does this incubation entail. Did they get a portion of your supply? I guess that's what's traditionally done. Also, Godbit, they could have a pretty sulfurous, controversial reputation at times. I've seen some threads from ZachXBT addressing some of the things they could have done. So I'm curious to hear your perspective, how it's been working with them, so we can have someone actually, working with their team directly.
Yeah, I mean, look, they've been really, really helpful. They support us from a marketing point of view. Of course, there is some supply that has gone in that way, but really this is more about actually incubating the gaming platform and creating something that transcends meme tokens to actually then have a bigger proposition with data capture, where we're able to actually introduce new products to the same audience through the distribution of meme tokens as rewards. It's been a really, really good experience.
Got you, man. With Bubble Mouse, we've actually been investigating a lot of meme coins on Solana. You got to check this out. This is actually quite funny. And one of the biggest piece of advice that we could give you would be extremely transparent with your tokenomics. From the very beginning, you should be very clear with, okay, this is how much of the supply is to Godbit, for example. I'm not sure this is something that you've shared publicly. I would doubt it, but I would love to be proven wrong. Then be transparent about how much you sold early on, how much you were holding. Looking at your distribution on Bubble Maps, I can see 4 clusters of connected wallets, each of them holding around 4% of the supply. So this is something that I would love to have your take on, but it's hard for me to show this on the
No, it's
Twitter
no
stream.
worries. Look, I mean, these things are amazing, and this is why the tech the bubble maps is building is so important for the space. We do hold different elements of supply within the team, and based on the fact that we want to continue to reward the community as we go through gaming, through other kind of like community reward questing, distribution in that sense. So absolutely, there are pockets of the token holding with people, but that they're all being held to support the growth of the game and the ecosystem.
Based on this, I would say you own around 20% of your supply. Am I right?
I couldn't tell you the exact amount. I could find out from the team and come back to you and let you know. But yeah, the core team would have that information. But that, I mean, in line with the fact that this is a project that we want to grow over a significant period of time, that sounds, like if that's what the bubble maps are saying, then we want to make sure that we're transparent about that.
No worries, my friend. No worries. I think, Dan, you raised your hands, if I'm not mistaken. If you have any questions, please go ahead.
Yeah, sounds good. I listened to your 1-minute pitch, and I've listened to the subsequent follow-up. In the spirit of the Shark Tank and being a little bit adversarial and being a little bit of devil's advocate, I still don't really understand what you're doing other than being a meme coin. You say you have something like a game. It just entirely sounds like a meme coin to me. So if there's something above and beyond being a meme coin, maybe try and make that a little bit more clear, because I literally don't know what you do.
Absolutely,
Apologies.
I appreciate that. Look, we are creating a number of casual games. Casual games like, like games where we involve questing, where we encourage the community to interact on a regular basis in a non kind of PvP manner, to interact with our character via different, scenarios, feeding Ben or taking Ben on a quest to collect coins and things like that.
Okay, fantastic. How does that tie into your token? Apologies.
So over time, we're building an ecosystem out that allows us to reward our community who play the game with further distribution of the token. And we want to get to a point where then we're in a position where we have a number of games, and actually they are distributed far and wide, and that we get to bring in additional tokens that have additional characters with additional distribution of other tokens involved.
So do you need your token to play the game? Do you need your token to
Not
get
at the
access to
moment,
game?
but
Like,
longer term,
what's the
there
demand?
will be rewards and access to different kinds of quests for holders versus non-holders. But these are things that are all in development at the moment.
Good. Apologies. I'm not trying to be
No, I
a
don't
dickhead.
think you
I'm
are. I
trying
think
to be a
they're
little bit
really, really
adversarial.
important questions.
No, those actually
Cheers,
are
thanks, man.
very important questions, because if your token is only a reward token, then you're going to be susceptible to high setting pressure. So you need to be on the other side of it. You need to have buying pressure from people to access your ecosystem, to play with your games. It needs to be balanced with buying pressure. So how are you gonna do this?
I think that's another really, really good point. And we have a big questing campaign that we're about to send live. We also have really great relationships with KOLs within the space, and we are working hard on socials and memetics to really kind of like integrate ourselves with the culture of Web3.
AD, go ahead, my friend.
All right, just following Dan's lead here and do my little Shark Tank impression. So I'm looking at Ben the Dog. Personally, I'm someone that's been heavily entrenched in the Solana ecosystem for many, many years. And, I'm looking at this token. It's been around since February. It's got 10,000 plus holders. But I look at the Twitter, and not a single person on Solana that I know follows this account, nor have I seen anybody talk about this project. So I just wanted to say that it looks like your user base is coming from elsewhere, not native to Solana. So it might be a good idea to maybe work with some Solana native projects for collaborations, for reach into Solana native users.
That's a really good point. It was a lot of the inspiration behind the Solana mobile collaboration. And yeah, we are also pursuing other partnerships like that to try and broaden the community reach.
Default, I see you're raising your hands. Go ahead.
Yeah, I was just gonna touch on what you just said earlier. It's I do advise a lot of projects, and you'd be surprised how many of them really don't at a fundamental level like understand the need for like incentivism for like no selling pressure, like you said. A project that I really like, but the fact that they just never really thought about this was it has to do with the Solana mobile phone. The the mobile that they actually mine, there was really no like incentive to like stake it or anything. So it literally just had consistent, always selling pressure on it. So the chart just went like straight down, and it just shows that you can like build a really good product and then just not think of the tokenomics as being that important when in reality, like they're extremely important.
Yeah, I agree. It's really, really important. And one of the things that's, like we had an amazing start out of the gate. We've got some really, really strong support. Our Telegram group is really, really active, and we've got people who actively play the game regularly and the games, and are really looking forward to the questing. Have we done everything, according to the the perfect roadmap for a Sol meme coin? No, but that's because I think we're trying to be a bit different. We are, to quote a phrase, we're fucking around and finding out. And one of the things that we're really, really, really passionate about, though, is onboarding as many people to give the platform, the gaming platform, a go, and then making sure that we're working hard to kind of like integrate ourselves into the memetics and the social culture from that end. And hopefully when people start to become more familiar with what we're doing, people see the essence of like collecting the token as a means to work with the platform a little bit more, but also like, potentially have an opportunity to hold some of it with a view that the bags will move in the right direction when more people are onboarded.
All right, ladies and gentlemen. That's how we're going to wrap it up today. That's the end of the Shark Tank. Check the clocks. That's an hour. You just grilled these guys for 15 minutes apiece, and I got to wrap it up. It takes a lot to resist my pirate voice. Y'all did a great job today on the Shark Tank. I won't do it the whole time. I just want you guys to know that if I had to, I could do it like that, but I'm sparing you that. So what I'm going to say here is at the end of the show, you all did great. To the team at Kima, to the team at that's here with us from Ben today. I'm proud of you guys coming up here and taking this Shark Tank format. It's different than a normal AMA would be. Very cool for you to come to choose and do this on the Mario Show. To the listeners today, thanks for hanging out for the Shark Tank. The news up front was hot and juicy. I appreciate the panel and all their input on that. And then the back half of this, thank you guys for being aggressive and being sharks for us. And thanks again to the guests for choosing to do this with us. Also, thanks to Nick from Bubble Maps. Man, I love doing spaces with you, dude. I appreciate you.
Absolutely, my love. On the next one.
Absolutely. And thanks to Mario and the team at IBC that give us the keys to drive the car and bring you guys together to do things like this. So if you're into the Shark Tank, if you're into all the other news shows and everything, there's two things you can do. Follow Mario, follow me, Pulse Digital, follow Bubble Maps. We do this all the time. And the other one is check the top of your X app. Anytime you turn it on, it's always a Mario show on the top because that's what we do best. So until then, I'll see you next time on the next Mario Nawfal X Spaces. Have a great day. We appreciate you.